Hey, good afternoon, everybody. This is Phil Resch, and we're getting started again with our weekly training. And we're going to focus today on one of our core carriers, National Life Group. And after we talk today, you'll see why they're a strategic partner of ours. But before we get started, I will also encourage everybody. The great collaboration is up and running. If you have not registered yet, please register at tgcconference.com. You click on register today, and what it'll do is it'll ask you to put your name, phone number, email address, who referred you. So there's a few marketers being involved in this process. As you can see, myself, my business partner Roderick, On Doan from Three Mark Financial, and others. But we'd like to know who referred you. And then ultimately, do you need a room? Yes or no? It'll send you an email to book a room. And if you, as Valor agents, participants, AK Financial, Doan, whatever, if you bring 5 people who are not in the organization currently, then your room will be comped. It will be free. So the idea is this is our objective to grow, but we have a lot of cool stuff, including how to work high-end estate planning cases. That'll be run by me in a breakout session. At the same time, if you want to diversify your mix with ACA Medicare, we have something for that as well. On the flip side, the second breakout, Roderick will be talking about working with athletes. He's worked and sold insurance on 3 Super Bowl MVPs and 1 NFL MVP, as well as other sports, of course. At the same time, I'll be talking about alternative real estate assets and what opportunities that could be to grow your business. So, this is called the Great Collaboration for a reason. You can be with any organization, any company, whatever. But if you want to hear how we go to business and ultimately how we can grow together, because as independents, we can work together. You can do comp splits, whatever. But ultimately, the idea is how can we collaborate and grow our portfolio? And as you can see from the agenda, what we have on the main stage, we have networking and vendor booths. National Life Group will be one of the companies there. We will also have our marketing team come up and talk about different ways you can go to market. Sales ideas from Mr. Joe Ross. So my alma mater at AIG. This guy was the mad scientist of sales ideas for the life insurance side. We have our breakout sessions. And then we're going to switch this out for something that I think you guys will really like. I've been talking with a gentleman who works with business owners. Now, how he works with them is he is a exit plan exit planning strategist to help people talk about their business, know what kind of weak spots they may have. But he doesn't have any life insurance licenses or anything anymore. He used to be a financial advisor. He creates these seminars. We can recruit people to these seminars, and then they come back to us for business purposes. So more on that as that unfolds. And then we have keynote speaker, Mr. David McKnight, coming to wrap up everything at the end of the meeting. So if you guys do not know him, he has a book called The Power of Zero, and a very renowned author. Also talks about asset classes like the IUL, like index annuities and things like that. And so you'll be able to scale your business up just by attending this free event. Those from out of town, obviously, you have to pay to get there and for a room. But as I mentioned before, if you're on this call, you are, part of Valor, so one way or another. So get people there and get your room comp. So once again, I need a head count, so please register today and pick which events you want to see in the breakout sessions. And just more to come on this. There's going to be raffles, free trips, Apple iPads, watches, things like that too. Want to make it fun. So now on to the meat and potatoes. We're going to talk today about National Life Group and why they're beneficial to have to your portfolio. So first and foremost, this company has been around for a very long time. As you can see, the little emblem up here 175 years. So, from what I heard, they're probably the second oldest company in the country, right behind New York Life. So they have history. They've been around a while. They are a mutual company. Now, this company has different product lines. There is term insurance, there is whole life, traditional dividend paying whole life. They also have IUL, they have two of them, and they also have um, another opportunity where you can work with business owners. So we talk about SEP plans, we talk about defined benefit, defined contribution plans. They have all of that available. And most importantly, is their underwriting is very lenient in two spots, which might be advantageous for you. First off, for people, when you talk about getting higher limits for someone who works, like for example's sake, let's say I made $100,000 a year. Well, if you go to some carriers, the multiple for $100,000 is 20 times your income for life insurance. Theirs is 40 times your income. So there's a bigger amount that you can put in with National Life Group and qualify. They are also a big player in the premium finance space, which is what turned them into the number one IUL company in the industry. That and their non-med programs, they go up to $3 million potentially for non-medical as well. So there's a lot of, and actually you see here, Forbes 2024, America's Best Insurance Company. So as you can see, there's a lot of reputability with National Life Group, and they're a great carrier. That's why they're one of the 5 carriers that I really lean on. Um, we have a ton of carriers. So we have a ton of carriers at our fingertips. We have over 30 carriers, but there are a select few I like to lean on more. AIG, for those who obviously know, my background used to be at AIG, so I know it very well. They also have the QOL bonus and all that other stuff that's enjoyable to have. But then on top of that, we also have F&G, pretty good with an income story, and they have true non-med, as we talked about last week, so 0 to 60 up to $1 million. And then we got these guys who have you ever had a client who got declined due to their foreign national status? There's a lot of us have. Well, I'm going to show you on the 3Mark site. Maybe you're not acquainted with them yet, but let's say we go into the 3Mark portal where we would get the contract from in the first place, and we go to their Foreign National Playbook. This is brand new. It's under Underwriting Resources Foreign National Playbook. You'll see Resident Alien I-10 Carriers, National Life Group. They have all the information here on how to work with the foreign national guidelines. And they are probably one of the most lenient out there for people who live in the United States, maybe don't have citizenship yet. For example's sake, they will take clients who have I-10s only and a passport. As long as they have some tie or nexus to the United States, we can get them coverage. So prior company, alma mater, if you had a visa with 6 months left on it or an extension, then you could get coverage. Here, as long as you have a valid I-10, you're pretty much good to go. So I remember always losing to National Life Group in South Florida because you have a lot of Venezuelans, you have a lot of Colombians, and people from the South American area who are actually here on refuge. And a lot of carriers won't take clients who are here on refuge. They will. So they ate up a lot of business from those people. And that's where you can check in from here, talking about different ways that you can go to market. Once again, the nexus is basically some type of real estate, married, student in on an F1 visa. They have very, very stringent, loose underwriting opportunities both on life and annuities. So great story from that standpoint. So going back to National Life Group, what I want to show you is a couple things. So the first thing I will show you is the advanced markets. And what you'll see here is this qualified plans tab. They have a whole tab for you to find information on qualified plans. Like some of you might be saying, I don't know what qualified plans are. 401ks, IRAs, SEP plans, all of that is what you would consider a qualified plan for a business owner. You can talk about the type of entities that were available to have a conversation with: C Corps, S Corps, partnerships, sole, LLC, nonprofit, and how it works. So they talk about different strategies on how you can enhance your game and work with different types of business owners. So what's a defined contribution plan? Okay. What is a 401k? It's a defined contribution. Defined benefit. This is a very intriguing one. It's also called a 412(e)(3) plan. These are very unique. They are not meant for everybody, but you can get up to, at least last year, 266,000 that you could write off in tax deductions, depending on how high your take home was through a defined benefit plan, which includes whole life insurance, traditional whole life insurance, because a defined benefit plan has to have guaranteed cash growth and a guaranteed death benefit, and that fits the bill, and they have that product. They also have annuities, and it would be fixed annuities, not fixed index annuities. But keep in mind, the reason why people are doing this is not for growth, it's for discounts or deductions. So these type of plans are out there, they're available, and what it does is it enhances your practice. You now have a better value proposition because you're not just going in to talk about wills and trusts, life insurance, and annuities. We have wills and trusts as well, life insurance, annuities, disability, retirement plans. We have premium finance, ACA, Medicare. You have a avenue through stuff like this, and National Life Group is in a lot of those different avenues. So once again, you can spend a lot of time in here. Going back, it was in the advanced markets tab under the qualified plans. And then you have other documents in here: estate planning for foreign nationals. You have a multi-life program guaranteed issue. If you work with, say, a group of doctors, and you have some that are healthy, some that might not be healthy, but all, like, you need at least 10 people, okay, 10 people in this program that make 75K or higher and are at the same organization, you can get guaranteed issue on IULs. Oh, sorry, it's 100K a year in W2 or K1 income. You can get IULs, multi-life IULs. And so we were talking with a realtor association, and they had $30 million set aside in their collective, and they wanted to bonus that out for $1 million PDA, premium deposit account, where they basically would have 30 IULs. They're going to give $1 million to each person. And National Life Group said they would take that. Unfortunately, the deal fell through. But if you think about that, that would have been target premium averages about 50 to 100,000 a person. So you're looking at, 1.5 to $3 million, all guaranteed issue. So there's stuff like that if you have a large association or group, there's an opportunity. And once again, the provider to provide that is National Life Group, who also has living benefits. I completely forgot about that. But when you talk about the companies that have living benefits, National Life Group was the first company to have living benefits. They had them, they even have a brochure in here, I don't know where, but they showed a claim payout in 1936. So they've been doing it for quite a while. Not sure if it's in here or not, but they've been doing it for quite a while, and they are one of the best or top carriers to offer it. The guy who wrote those living benefits or created them or had a process in that brought that over to AIG and integrated that into that QOL portfolio. So, last promotion I'll talk about too is if you're trying to get in with CPAs, because CPAs are a very big center of influence. They're probably pretty busy right about nowish. However, if you wanted to invite them to a seminar, they have it twice a year in April, or excuse me, in May and November, I think it is, in Las Vegas. And they bring out you as an agent plus your CPA to a hosted course by National Life Group. They get CPA credits and they learn different ways that you guys can partner together. So if you're looking for a way to create a center of influence, you can offer an opportunity for them to come with you to Vegas and you guys all learn together. So it's a really cool thing that National Life Group does to deepen the relationships in your community. So let's talk about illustrations. And once again, this kind of goes into the idea of what your client has available at their fingertips. So you'll see as we open up the illustration software, um, you'll see that there's a ton of options here. You're like, holy cow, what does all this mean? So let's break it down first. And I'm just going to do term insurance. You'll see LSW term and NL term. What's the difference? Well, LSW term is for everywhere in the United States except for New York. New York is NL. So anywhere you see NL, that's New York. The interesting thing is they're the only carrier to offer living benefits inside the state of New York. So another notch in the cap for National Life Group on that. They were grandfathered in because they've had them for so long. But if we go to LSW term and we click on there, we're now going into their software. Now, if you're licensed with National Life Group and you would rather do it in WinFlex, you can do the illustrations in WinFlex. So this company that runs these, this is called Foresight. Foresight is a direct competitor of WinFlex, and so they often go back and forth. But what would happen is you would go into your profile, and inside your profile, because it's not going to be in there, but if you did get their code, you'd hit add companies, and then you would find National Life Group. You would enter the code here and then hit place request, and then you'll be able to run all the illustrations for National Life Group in WinFlex as well. But there's a little bit more intuitive opportunities inside of Foresight that you don't get inside of WinFlex. So if I just did Phil Resch here, and we'll do 12/22/1981, and I'm just going to pretend I'm a standard non-tobacco. If you don't know what your client is at, you can always hit underwriting guidelines and it'll pop up with that information I already provided you. But you'll see on the side here, it already started out with a $100,000 face. That's the standard default, 10, 15, 20, 30-year annual and monthly premiums already. So we go death benefit funding, and let's just say I want $1 million. You'll see I can do that, or I can do quick view and I can see them all in one spot. Here's the monthly premiums. Now, some of you may ask, what's ART? That's called annual renewable term. As you can see, it's dirt cheap to start compared to a 30-year, but it starts to accelerate quickly over time because it's annual renewable. So if, for example's sake, you had a client who you knew was going to convert from term to perm, maybe after a year, do an ART instead of a 10-year. Okay, so just a thought or an idea. But you will probably sit there and compare to, say, an AIG QOL term, because that has living benefits as well, the flex term. The flex term will be cheaper. I'm going to just throw that out there right off the bat because AIG Corebridge is a termite shop. They typically have more cost efficient term. But once again, it depends on the niche, it depends on the client, it depends on the offer. Do they have iTunes? Do they not? Things like that. That all matters when it comes to actual underwriting. So we can't just use the cost as everything. Okay. But that's why you'll see on spreadsheets of term, you'll never see National Life Group or the Partners Group product for AIG. But you have 10, 15, 20, and 30 here. And if you actually saw the actual report or the illustration, what you'll see is if I run the report, so they've got this little wheel, and all the carriers are starting to do this. AIG did it too. And so is Columbus now too. So if you die too soon, get sick along the way, or you live too long, that's the story. Living benefits, cash value life insurance, but they actually have a projected accelerated benefit. So if you had some type of issue or ailment at say certain ages, like 52, these would probably be the maximum you could get on the term. Terminal illness, chronic illnesses per month. It's not lump sum, but this is just an idea off the top of your head. They give you some actual ironclad numbers. If we scroll through, talk about why you would need these certain things, but if we scroll through, we can see the normal, keep scrolling, term. Like I elected a 20-year term, but if I go down to the 12th page here, you'll see I can see annual, semi-quarterly, or monthly. You can see 10, 15, 20, and 30 as well. So if your client wants options, durations, you can get all of that in one spot. If they know their face amount, you can get them all the other options. They just have to look at this 12th page. So it's an easy way for you to get in front of them and stay in front of them as opposed to, now I got to run this, now I got to run that, and everything else. So living benefits, fully convertible on the product, all the way up to age 70 or the entire duration of the term, whichever comes first. You retain your risk class, but you have your new age. So either way, it's a great opportunity, and you get up to $2 million in potential non-med with National Life Group per term. So term is pretty self-explanatory, pretty easy. So I want to dive in now and show you the main page again. No, I want to show you here, new illustration. But this time, what we're going to do is we're going to go to Index Universal Life. And once again, you'll see Flex Life NL. So NL being New York. And then you have Summit and Peak Life. These used to be the same product. They used to both be Peak Life, but they changed in anywhere outside of New York is Summit Life. Inside is Peak Life. You're going to use the Summit at $1 million face amount and up. The Summit, if you're going to do $1 million for a juvie, which you can do $1 million at National Life Group, they do not scrutinize that. You just have to have double the coverage on the parents, but you would do the Summit Life. And they look really good with juvenile cases. That's a lot of what they do is you think you got the juvenile, so the parents need it as well. So why would you intermix with different companies? And that's why you typically see a whole group go with National Life Group from that standpoint. But I'm going to take you in the Flex Life here just to show you how this rolls. And it's really cool because will be Fee Resh, no Phil Resh. Once again, you know, I'm gonna just say I'm 40 on this 12, 22, 1983. So now I'm 40, big 4-0. So we get a death benefit and funding, and it has none for face type solve, as none for premium. So this is like your no solve. You could do anything you want in these parameters. But what I want to do is I want to do that LERP design. So minimum face, max accumulation opportunity. So I'm going to click here, minimum death benefit, max cash value. Anytime you have uh, some type of insurance you're going for, it's either you have the death benefit or you have the premium. You can't have neither, but you can have both and figure out if that works. But you typically can't have neither. So this one, you have an X right now, and it's not showing you any calculation because target premium of what? We're trying to solve for this. So I have to specify the amount, and they're showing annual here. I'm going to say monthly, and let's just say I want to do $1,000 a month. Ooh, $1,000 a month. So some unique features inside this product suite or inside this illustration design, kind of funky, but hear me out. Let's say I am 40 and I only want to do $1,000 for 20 years. So you'll see I want to change it to increasing because we want it to go for 20 years while increasing. So I'm going to say change year in 21, and it will change it to level for me. Then you'll see here it says 1 to maturity or 1 to M. So if I want to do 1 to 20, that would change the design. Or if I had it by age, say it's not an easy number like 40, I would do 1 to, because it's year 1, age 60. You have to have that A, and that'll change it to age for you. So I'm just going to keep it simple though and say 20. There's no 1035 exchange. I want to show distributions, and I'm going to solve for income. And the amount I'm going to take is from age 65 to age 89. Loans, and they have 3 different types of loans. First one, participating loans is what we're used to. So you have a loan, a fixed participating loan. It's about a 5.5 charge. And then you have that positive cash arbitrage. It's fixed. The variable loan is based off of an indexing loan strategy. I forget the actual loan rate it goes by, but right now I think it's at 5.9%. But the participating loan rate can drop to 2.5%. It could go to 3.5. So it varies. Any illustration you run is always going to show you the most aggressive one. I would probably stick with fixed loans because let's think about it. We are going to take this money out in our mid 60s. You want to mitigate your exposure to risk. But fixed loan at 5%, excuse me, not 5.5, but 5% is still pretty comparable. So 65 to 89 loans, fixed loans. I'm not doing any loan repayments. The last thing I want to do is $1 at maturity, and it auto populates it for you. So if I hit quick view, where we can see the simplest and easiest way, I'm funding $1,000 a month. My target premium is 3108, and you'll see I get income of about 47,263. Put in 12, get 47 out, so it's about four to one for your dollar from investment to income. Now, if you'll notice, this is going to show you the most you can put in on a guideline level premium is 12,000. 1,000 premium, 12,000 guideline level. So if you talk to clients, their peak earning years are late 40s, early 50s. So if you want to buffer or add room in, National Life Group makes it pretty easy in their software to do that. So if I go back to death benefit and funding, and I do a balanced DB, what it's going to do is it's going to add some more room. So you have a little bit higher of a death benefit. You'll see the death benefit is now 379 or 369 to start with. And now I have more room. I have $6,000 more that I could put in per year. So If I want to put more in later, I can do that. Increases the target up, you get paid a little bit more, like 1,500 more, I think, somewhere around there. And it only dropped by about $2,000 a year. So you're talking what, like $200 roughly per month that you're missing out on, but you have a higher opportunity to put more money into it later. So as a consumer, you're getting higher death benefit, so more living benefits. You have a higher threshold to invest more money into, whether you get a bonus, you can put a lump sum in at a certain period of time, and you're not really hurting your cash that much comparatively to a minimum face no met. Producer side, you get a little bit more comp, which always helps, as you're trying to feed your family. So, but I think all the benefits aside from the additional comp, it's not a egregious amount, because some people will be like, oh, well, let's put it up to 500K. And then now you're towing a line. If the client wants a mixture of 500K death benefit and cash, we can do the no solve option and give them that too. But this is a way that you can play around with the software to give you an idea on how you can utilize. And I did Flex Life, but you can do Summit once again if it's a million or higher. And National Life Group is one of the premium providers for uh, Kaizen, which is this ILEA software I'm pulling up. Kaizen is premium finance. Premium finance, if you've never talked to someone before, I like to say it's like bank finance retirement plans. And here's how it works. So if we go to estimate my benefits, I'm 40, pretending to be 40, and I want to contribute $40,000 to a plan for 5 years, in 5 years only. What we would see is I'm putting in $40,000 a year, 1, 2, 3, 4, 5 times. The bank is putting in 1, 2, 3, 4, 5 of 26,000, and then 64,000 for the last 5 years. So it's a bank funded retirement strategy. It's a LIRP, life insurance retirement plan, but now you're enhancing it by adding in a bank to leverage and give you more death benefit, more living benefits, extra juice to give you more of a retirement strategy. And if we look at the benefits, you'll see here that my initial death benefit starts out at 1.2 million. At age 65 to 90, I'm taking out $84,000 a year in tax-free income for a total benefit of 2.184 million in tax-free income, and I still leave a legacy of close to over $750,000 by leveraging the strategy. And you can even see comparisons here on someone using an index policy by itself versus a Kaizen plan, what kind of income you could get out of it, and things along that nature. This is where NLG really accelerated, because it took the idea of premium finance, which is normally for your $5 million net worths and up, and brought it to Main Street, where if you have 2 years worth of W-2s at $100,000, you can qualify for a Kaizen plan. And so it's an opportunity where people have something that the affluent have used now at their fingertips. So Kaizen really helped NLG grow their business tenfold as well because of the story. And if you haven't seen this and you want me to send you a link so you could get this ILEA presentation and you want to play around with it yourself, feel free to email me. I do have an easier email address now. It's phil@valorfs, so Valor Financial Specialist.com. So phil@valorfs.com. We're going to try and start using that more for ease of use. But if you want to see one for yourself, if you want to tinker around with it, feel free to email me and I can send you a link like this too, just so you could see what type of stuff that you could offer for your agents as well. Great story, great way to get income-based sales. Even if they don't buy the bank finance retirement strategy, they'll probably still be interested in a LIRP and you could sell them one without the bank financing. So, in summary, what we talked about today, National Life Group, 175-year-old company, been around a long time. They have living benefits just like AIG. They go up to 1.5 million in chronic and 1 million in critical and terminal. They have term insurance, permanent insurance, both IULs and whole life, and they even have living benefits in New York. They're the only carrier that does. You have the ability to do premium finance with them. You have the ability to do set plans, IRAs. You have the ability to do defined contribution plans, 412(e)(3) plans, and they take ITINs where even for term insurance too. So there's a big story with this company, and they should be someone that you should look at. Once again, we have about 5 primary partners. We've got 30 carriers, but we have 5 primary partners that can do a lot of the work for us. And I would say the big thing is that you have the opportunity to grow with them. So what I'll do is I'll stop the recording and see if anybody has any